It's James Black here with the Canadian Securities Exchange. We're in the midst of VRIC here in Vancouver, and I'm excited to introduce today's guest, Adrian Day, Chairman and Chief Executive Officer, Adrian Day Asset Management. Adrian is considered a pioneer in the United States in promoting the benefits of global investing. An honors graduate at the London School of Economics, Adrian is widely recognized for his global investment commentaries and his published research. Thank you so much for joining me today, Adrian, to talk about primarily gold. I think today is going to be a gold discussion. It's on everyone's mind. We've seen the price activity on this. You've been on the show floor for the last day. I just want to get your basic impression coming to Cambridge House all these years. What's happening?
Yeah, well, thank you for having me. And that introduction, wow, I'm really looking forward to meeting this guy.
That was just the first paragraph. Yeah.
Who is this guy?
Yeah.
Well, it's obviously much fuller than normal. I mean, it's, if you go back 2 years ago, the floor was empty. They even had to shrink for space, if you remember.
Yeah.
They cut the floor in half. Much fuller than normal. Obviously, people are very upbeat, people are very pleased. But, there is a strong current of, concern maybe, or the question, should I be taking profits? And I think that's healthy, that people are looking at that. Mm-hmm. To me, it also is a healthy reflection of the gold market, because you don't get a top in gold without sentiment being overwhelmingly bullish. So the fact that every person who's spoken, the first question is, should I be taking profits? That I think is a healthy sign.
Right. So again, you're talking about a ton of momentum in the space, and obviously the question of, those who got in, say, below 2,000 or today they're looking at a nice return. You think there could be a pullback, or we're just looking at this thing running forever in aggregate? Like, what's your
Well, maybe I'll talk about what I think people should be doing, what I think they should be doing, maybe separately. But in the market, look, we're definitely going to have a pullback.
Yeah.
I mean, that's a certainty. Every long bull market, and gold moves in long cycles, every bull market has a pullback. The most famous one, of course, is in 1974-75, when gold went from virtually 200 to virtually 100, 50% drop in a year.
Yeah.
And the stocks, of course, were slaughtered. We had the same, not to the same extent, but we had a 30% pullback in 2006. People tend to forget about that. When you look back, you think, we had this bull market from 201 to 208, but people forget that there was a big correction in the middle. That's normal. And it's difficult to say when that's going to happen. So the way I look at it is, are we at a top, a final top? Are we at a top in the gold cycle? I don't think we are anywhere close to a top.
Right.
And there's a lot of reasons why I say that.
Give us the number one.
That's a bold statement, so maybe I should explain it.
Yeah.
All of the drivers of gold for the last 3 years, all of the reasons that people have been buying gold are still in place. If you're a central bank and you're worried about having a concentration of assets in a currency, a concentration of assets in a single currency issued by a profligate government that is now using its dominance to weaponize the dollar, that's been going on for 25 years, increasingly. But what has changed in the last year? Nothing. I mean, nothing has gone backwards in the last year.
Right.
So if you're a central bank and you have 48% of your assets in the dollar, is that still too much? If you're worried about those things, I would say yes. If you're worried about, if you're wealthy family, wealthy individual, worried about the deficits around the world and the increase in debt, has anything changed? No. So all the drivers of gold for the last 3 years remain in place, but in addition, we have a couple of new drivers, and the most important one, of course, is Tether. Tether, the U.S. stablecoin company. They're the, 7th or 8th largest holder of U.S. treasuries in the world.
Yeah.
I mean, just let that sink in for a second. And now they've issued a U.S. a gold-backed stablecoin. So it's a gold stablecoin that they've issued, and they are buying gold. For the last 2 quarters, not the fourth quarter where we don't have the numbers yet, but for the second and third quarter of last year, Tether bought more gold than any individual central bank. I mean, that's astonishing, isn't it? And their plan, I mean, things can go wrong, but when you listen to Juan Santori, the chief of global projects for Tether, he said he thinks the growth in the gold stablecoin will be as great in the next 5 years as the growth in the US stablecoin in the last 5 years. Even if he's only half right, that is an awful lot of gold buying going forward. So, and then when you look at one other thing to say, well, are we at the top? The public, and by the public, I don't mean the people who've been around the gold space for a long time and at the VRIC show. I mean the dentist in Oklahoma that maybe's never owned gold. Yeah. The financial planner at Charles Schwab that doesn't have any of his clients' assets in gold. Those people are simply not in gold. I think it's important we hammer that home. If you look at the GDX, which is, as you know, the largest gold miner ETF in the world, they had net outflows last month. Net outflows. They've had net outflows for 1 month, 2 months, 3 months, 6 months, and 12 months. That's not a mania. That is not a sign of a top.
Right.
So I don't think we're anywhere near a top. Now, could we have a correction? We could have a correction anytime.
Yeah.
There's no indication of it yet because of all of the uncertainty. I won't say craziness because I don't want to be political, but all of the uncertainty that's emanating from Washington. But, you know, something could happen that, you know, you have a pullback and people just need to be prepared for that.
Sure, the sentiment could shift a bit. The fundamentals, in your opinion, seem pretty strong towards
Absolutely.
further growth. Okay. You mentioned, so exposing oneself to a gold holding, there's different ways of doing this, right? You could buy it, as you mentioned, stablecoins is another new format through which someone can get exposure. They can buy, you know, resource stocks, whether it's producers, explorers. Let's just talk about the stock market, you know, in gold holdings. You know, where do you even start forming an opinion about what you should expose yourself to?
I think an awful lot depends on, first of all, whether you're already exposed, so
Yeah.
you're thinking of adding. And then after that question is, are you a conservative investor? What's your age? What's your financial obligations? Can you accept risk? Can you accept volatility and risk? And of course, volatility and risk are two different things. And volatility is inherent in the gold equity space. You're going to have volatility even with Agnico and Franco, even with the biggest and the best. You're going to have volatility. So can you accept volatility? And that's a financial question, but it's also a mental question, a psychological question. There are some people, I've had clients with $100 million net worth who simply I had one guy call me and said, Adrian, I cannot sleep at night. What's wrong? Well, you know, Franco just dropped 20% and he couldn't sleep. So it's a financial a financial factor and a mental factor. So you have to look at all of those things, frankly. And I mean, you'd have to sit down with an individual and talk to him. I think being across the entire spectrum, people should be looking. I mentioned Franco and Agnico. Franco, Agnico, Wheaton, really big companies, really solid. If gold goes from 5,000 to 700, you can be pretty darn sure that they will go up. Are they going to give you the biggest talk? No.
Yeah.
But you can be reasonably sure that those stocks will go up, and in the gold space, they will do so at relatively low risk. You can look at the big miners, the big royalty companies. You can look at the development companies, which generally speaking as a group have had tremendous growth in the stock price, appreciation in stock price in the last 6 months, because as people moved from Agnico and Kinross and Newmont and
They
Barrick,
get valued out and you have to come...
people moved down the chain.
Yeah.
They've had great growth, but I tell you, there's a lot of room left in companies like Equinox and Hemlo as they grow. And then you move down to smaller producers, to smaller royalty companies, and of course to exploration companies. And a lot of those stocks, they've moved, but they haven't moved as much as the bigger ones. I think that's where you can find the best values with the most potential right here, recognizing that the lower down the food chain you get, typically, the more risk you have.
Yeah, and I mean, I interviewed Ross Beatty last year at this time,
great.
and there was a huge disconnect between explorers and the price of the underlying asset they were looking for. If you've got a lot of choice in the market, there's hundreds upon hundreds of junior explorers looking for gold or silver and copper listed on the Canadian exchanges. But, what is the first thing you think as a analyst is more important, the jurisdiction or the management?
If we're talking juniors and management, to me,
Yeah.
far and away. Now, I'm not a geologist, so if you're a geologist, like Joe Mazumdar or someone, you're going to really look at the project first. But I would say that good management with a lousy project and no money, I'll take them over bad management with a good project and lots of money, because they'll waste some money and they'll somehow, destroy the project. So management to me is the most important thing there is. And that means, the track record, certainly the ethics, communicate with the market. It means a lot of things, but management is the most important thing for me. And that's why these shows are so important, because you can walk the floor and you can actually talk to the CEOs, often the chairman's there as well, the CFO's there as well, and you can get a feel. And for me, getting to know management is more than a half-hour Zoom call about the project. I want to get to know the person. I want to go to lunch with them. I want to see how they treat the waiter or the waitress. Because if they're rude to the waitress, they're going to be rude to their staff. I've been on mining trips, for example, where the team from Toronto will come in and everybody runs out, and the Mexican chef runs up and hugs him and so pleased to meet you. They're going to get their social license.
Yes, yeah, absolutely.
I've also been on mine trips where, 3 of them walk in with their Brioni suits and Gucci loafers with their Louis Vuitton briefcases, and people kind of turn away and pretend to be busy. And that's not a good atmosphere.
No, absolutely not. And as you mentioned, stakeholder management is a necessity with these projects, especially when we're working with, environmental and sustainability requirements with the First Nations and various levels of government. It's a non-starter if you can't handle that stuff.
So people are the most important to me, and the second thing would be balance sheet. Do they have money? Do they have cash flow? Do they have access to capital?
Yeah.
Now, most of the exploration companies, of course, don't have particularly strong balance sheets and don't have cash flow. So you look, okay, who are their big shareholders? You mentioned Ross Beatty. I can tell you, if Ross Beatty is a 15% shareholder of a company, that if they need money, he's going to lend them money, invest in them, if he still likes the project.
Yeah.
So looking at who the shareholders are, if Rick rules, he'll probably do it on terms that are exceptionally favorable to him, but at least they can get capital in a bad market. This isn't a bad market. So things like that are very, very important.
No, and Eric Sprott's another one.
Eric Sprott.
Just been, seeding deals all over the place.
Yep.
And it's been a big part of carrying companies through the last few years when things weren't quite as
Of
generous.
course.
I'm going to ask you one last question. You obviously have a wealth of experience and knowledge, but how do you wake up every day and build your perspective on the market, and in particular gold, things that you're giving advice on? What's, not to give away your secret sauce, but I'm just curious how you try to make sense of this market. You mentioned some madness as well, so maybe that.
Gold itself, of course, is very difficult to value.
Yeah.
It's not like, a Nestle or a manufacturing company where you've got earnings and price-earnings ratio and a cash flow and a debt and a dividend yield. The critics famously say gold has no earnings, doesn't pay a dividend. So it is difficult to value. So you always have to value gold relative to something else, relative to the debt in the world, relative to the money supply growth, and then obviously relative to other things like relative to the stock market. That's a famous thing people look at. So, but that's a bit of a longer term thing. I mean, one of the things I certainly look at would be flows.
Yeah.
So I mentioned a GDX. When you see, flows picking up at a very steady pace and at a very large pace, such as we saw in 2011, even though the fundamentals look pretty strong. You know, Greece was falling apart, Portugal was falling apart, it looked like Europe was going to break up. But the flows were so incredibly strong. GDX and even GLD were trading at premiums. Now, that shouldn't happen. You shouldn't have a premium on a physical gold product, not a 4% premium that holds on for 2 or 3 weeks. So that was a sign to me that the market was getting frothy. So I look at flows an awful lot.
And is there any particular publication or websites or anything you would?
Yeah, there's something called Verify. I mean, I look on Bloomberg,
okay.
But most people don't have Bloomberg, of course. Not a
terminal.
36,000 a year.
Yeah.
29,000 for your second terminal, big discount.
Deal,
oh,
yeah.
wow, deal. There's a website called Verify.
Yeah.
I think it's VERIFI. Do you know
got
it?
Yeah, we know.
And
it, yeah.
so you just type in GLD flows, and it'll pop up probably top of the list.
Okay, that's an awesome tip. Adrian, just before we go, I want people to know where they can connect with your content and connect with you.
Thank you very much.
Yeah.
It's adrianday.com is the easiest way.
Yeah.
adrianday.com.
Okay, perfect. And you'll be speaking at VRIC, and I'm sure that'll be available on the VRIC website or on the social media and YouTube channel after. So no shortage of Adrian Day content this year. Once again, that's James Black with the Canadian Securities Exchange with our special guest, Adrian Day. We talked about gold today on the CSE Podcast. For those watching, please subscribe, and thanks again for tuning in.